The Reserve Bank of Australia is widely expected to raise interest rates today at its July board meeting. The question is, though, by how much? Financial markets are expecting a 50 basis point rate hike, and if that happens, it will bring the cash rate to its highest level in 3 years. Joining me now live is Research Director for RateCity, Sally Tindall. Sally, thank you very much for joining us. So, 50 basis points, is that on the money, do you think?
Well, Governor Lowe said a few weeks ago that he was considering between a 0.25 hike, that's a standard hike, and a double hike of 0.5. I can't see a world where they don't pull the trigger on a double hike. The RBA has to get cracking on inflation. It's already at 5.1%. Now forecast to hit 7% by the end of this year. That we don't want to end up like the US, where inflation is too hard to rein in. But also, interestingly, Governor Lowe said Australians don't want to be in this mindset where we naturally expect prices to keep going up and up and up, because that mindset is really hard to shift.
Absolutely, and borrowers will certainly be watching today's decision very closely. What does an increase like that look like for mortgage holders? How much could they be up for?
Yeah, okay, let's talk about it on a double hike. Someone with a $500,000 mortgage, if it goes up by 0.5%, they could see their monthly mortgage repayments increase by $137 a month. But of course, we've had hikes in May and June as well. So in total, across the 3 months, that could rise to a total of $333 a month. Now, larger loans, they'll go up by more. On $1 million loan, if the RBA hikes by 0.5, in total, they could see their repayments go up by $665. That's not a one-off. That's every single month. Yeah.
That's a lot of money.
It's a lot of money.
And I guess if you're a borrower, is finding a competitive fixed rate now for your mortgage, is that simply impossible?
Well, we saw some ginormous hikes last week. Australia's biggest bank was leading the way with this. They hiked their fixed rates across the board, all terms, by 1.4%. That's, almost 6 standard RBA hikes in one go. So really, fixing with the big 4 banks is pretty much a moot point these days. It's just not competitive anymore. Yes, there's some relatively competitive fixed rates if you scratch around, if you know where to look, only really in the 1 to 2 term years. I think the lowest on our database last time I checked was 2.99% fixed for 1 year. But they are becoming rarer than hen's teeth. I think in a few weeks' time that'll be totally gone. But the important thing is to have a look at your home loan, give it a health check, understand what your rate is and whether it's competitive, whether you're on a fixed or whether you're on a variable rate or if you're on a fixed rate that's coming to an end, and a lot of them are. Now's the time to start giving that rate a good health check.
Yeah, that's really good advice, and I'm sure there'll be many people doing that given the situation. We actually just went to that press conference we saw before about the flooding emergency in New South Wales. What sort of an impact is that likely to have on inflation?
Oh, this could see inflation skyrocket even further, and the RBA will be busily factoring that in. We know that the floods in March had a major impact on the cost of goods, certain goods, things like lettuces, for example. And so you can only imagine we're in for round 2, unfortunately. Look, there are a few inflation measures that are completely out of the RBA's control, the war in Ukraine being one of the other ones. But they still need to go through this task of lifting up rates, considering especially that rates were at record lows. It's not normal to have a cash rate sitting at 0.85%. Governor Lowe has said the new norm could be around 2.5%. They've still got a long way to go. They do need to get hiking, even if it's not going to change the things that are affected by the floods or the war.
So there's a long way to go.
Yes.
I guess where will the cash rate get to?
So many economists are predicting another double hike, if you can believe that, next month. That would make it 3 in a row. That would be one of the fastest increases to our cash rate in recent history, I think back till 1994. But it's not even going to stop there. We could see the cash rate get to 2.35 by Christmas. And Westpac's economic team, they're predicting a cash rate could get to 2.6% by February of next year. That's 2.5% increase in less than 12 months. That's a really sharp rise. And for that $500,000 mortgage holder, they could see their monthly repayments increase in total by $685. For that $1 million mortgage holder, they could see their repayments increase by $1,370 in total over the space of 10 months. It's a phenomenal rise. It is going to put more people into mortgage stress.
That is a phenomenal rise, and I think everyone will be watching today's board meeting and subsequent board meetings very closely. Sally Tindall, thank you so much. Always great to speak with you. I appreciate your time today.
Thanks for having me.